What is survivorship life insurance and why might you want it? Hi, I'm Matt with Carlin Financial Group. For the best retirement information and to help make sure you don't outlive your money, subscribe to our channel and ring the bell to be notified when we post new videos. Survivorship life insurance, also known as a second to die policy, is a joint permanent life insurance policy that pays out upon the death of all insured parties. Now, today I'm going to discuss what is probably the most common use of this type of policy: joint insurance on a husband and wife that would pay out only after both have passed away. There could be other uses for this type of life insurance, but we'll save that for another day. For some people, it may seem a little odd to own a life insurance policy that pays only after both people have died. And it is certainly true that this might not be the best choice for many people. However, there are situations where it could be a good solution. So, who might benefit the most from this type of policy? Well, if you know your heirs will likely be hit with a heavy tax bill, you might be an ideal candidate for survivorship insurance, particularly if your estate is of a significant enough size to be subject to the estate tax. Of course, this type of tax will affect only high net worth individuals, and as of today, the exclusion limit is $12.06 million. So many of you out there wouldn't currently be affected by this particular tax. Of course, the exclusion limit has changed over the years, and for example, it was only $675,000 in 2001, and it very likely could change again in the future. The current top estate tax rate is 40% and has been as high as 55% since 2000. So we're talking about what could be a significant tax bill for people in this situation. Now, many of you are probably thinking your heirs will never have to worry about dealing with estate taxes, and that could likely be true for many of us. But there are other situations that could still lead to a significant tax liability before your heirs get their share of what you intended to leave on. For example, if you have a lot of money in your traditional IRAs or other tax-deferred investments and you pass away, your beneficiaries will have to pay taxes on the full amount of those IRAs. Now, based on recent changes to retirement law, they could choose to pay those taxes out over 10 years, or just wait until the end of that 10-year period and withdraw all of it at once. Though these rules are still being clarified and could change, waiting it out may seem like a good idea, but remember that the longer you defer paying the taxes, the greater the potential for more accumulation to occur within those accounts, meaning potentially more taxes in the long run. But one way or the other, they will have to pay taxes on the money. A death benefit paid free of federal income tax could be a big help to your beneficiaries in addressing these tax burdens. So what are some of the pros to purchasing this type of plan? Well, first, it might be less expensive. You may find it less costly to insure the same two individuals with a single survivorship life insurance policy rather than purchasing policies for each individual. Since the policy doesn't pay out until the second person passes, the risk for the insurance company is statistically less, meaning the premiums could be less. It also could be easier to qualify than if you were to apply on your own. Now, determining coverage eligibility, the insurance company is likely to focus more on the youngest or the healthiest of the two insured individuals. In fact, for someone who may be considered individually uninsurable because of medical history, it's a potential means of obtaining coverage. I'm currently working with a couple on possibly obtaining this type of survivorship or second to die life insurance policy. This coverage is a good fit for them for many of the reasons I've detailed so far. They have a high net worth, and if either spouse passed away, the other would be okay because of the overall assets between them and the unique tax privileges afforded to a spouse. However, when the second person passes away, or in the unlikely event both passed away at the same time, their beneficiaries could be left with a very large tax bill that this policy could help them pay. Another thing to consider is estate preservation. The chances of either you or your spouse needing long-term care services are above 50%, and the price for long-term care insurance has been climbing for some time. Some second to die or survivorship policies could potentially be set up as a hybrid long-term care policy. Now, many of these policies allow both spouses to have early access while they're still living to the same pool of potential benefits. So instead of needing to spend down their outside assets, they could potentially use this policy to help pay for the cost of long-term care. Some of the cons, well, the first is rather obvious. No death benefit is paid until both parties have passed. Secondly, life happens, and though it may seem unlikely when you purchase such a policy, marital changes could occur. Even if a couple divorces, the policy would still be in force, premiums still have to be paid. Even if one spouse passes away and the survivor remarries, the premiums would need to continue to be paid in order for your beneficiaries to receive the death benefit. And as a final note, if you're looking to focus on cash accumulation potential inside of a life insurance policy, I wouldn't recommend this strategy. The design of this type of contract is to focus on the largest death benefit possible, not cash accumulation. Just as one type of investment isn't suitable for everyone out there, one type of life insurance policy likely isn't either. The survivorship or second to die policy is just one of many life products that could help you leave a legacy, address potential tax concerns, and provide for your loved ones in the coming years. Thanks for joining me today. I hope this information is helpful. If you have more questions, leave us a comment below and we'll do our best to address it in future videos. If you'd like help planning your financial future, you can learn more about becoming a client by visiting the link below in the description. Don't forget to subscribe to our channel, and again, ring the bell so you can be notified when we post new videos. And as always, live today, plan for tomorrow.